All of you. I think we can, I know it's a rainy evening, but we can have a bit of interaction. That's okay. Good evening, all of you. Wonderful. It's 6:00 and we are back at AMA with what we call it as one of the marquee events of the AMA calendar, that is analysis of the union budget, the chills and thrills of the Finance Bill 2024. In fact, I don't want to be between you and the experts, but I have a formality to do. And before I do that, I just want to make a small note. Unmesh bhai was very lovingly telling me કે કદાચ જૈનિલભાઈ તમારા જન્મ પહેલાથી આ સેશન ચાલુ થાય છે એટલે I told him કે ઉન્મેશભાઈ મારો 7 વર્ષ મોટો સગો ભાઈ છે અને મારા મમ્મી પપ્પાના જન્મ પહેલા અને એમના લગ્ન પહેલાથી આ સેશન ચાલે છે actually એટલે 1981 to 2024. So I think Mukesh sir, hats off to this unbelievable legacy that we've been able to carry forward. Such an honor. In fact, two gentlemen on the stage. The last place that they need an introduction is this auditorium. But I'll still do the honors. It's just a couple of lines. Sir warned me ke Tuku Rakjo, but I said, sir, couple of lines at least, if not more. Of course, Shri Mukesh Patel, sir, a renowned advocate and an international tax expert, as we all know. Decades of experience, legal awareness, taxpayer awareness, done through books, columns, and media. Is known for his prolific writing and speaking on tax planning, has been appointed to very many government committees and has been holding very prestigious positions as well. In fact, latest in 2024 being appointed as the first honorary consul of Japan in India, adding to his list of international recognition. I think that is a matter of true pride and privilege for us at the AMS, sir. And of course, as we all know, he has been our past president at the Ahmedabad Management Association. Of course, we don't, sir knows he's part of the community, not any large bouquets and tokens to be given, but certainly one flower and rose for you, sir. So, such a nostalgic moment. 2011, I was graduating from HL College of Commerce. Sir was chief guest and he handed me so many medallions. I think to give back a small flower today brings back a lot of memories. Of course, joining Mukesh sir on the stage is also Dr. Savan Godiawala. Savan sir is a PhD CA LLB and a visiting professor at IIM Ahmedabad and IIT Gandhinagar. Is also the current president of the Ahmedabad Management Association, is an angel investor, a startup mentor, and was also until recently partner at Deloitte. Sir, thank you so much. Also one flower for you, and then I hand over the stage for you as well. All right, so I give stage to Savan sir for his comments, and then we have Mukesh sir. Meanwhile, at about 7:15, we'll have volunteers taking the chits from you. So if you have questions as they come to you, or you already have questions in mind straight away, you can note that down. Around 7:15, the volunteers will come to your desk and start collecting the questions and give it to Savan bhai. So the stage is yours. Thank you.
Good evening, ladies and gentlemen. Shri Mukesh bhai, Divyesh bhai, Dinesh bhai, Yatindra bhai, Ambar bhai, friends. Certainly an exciting moment for me. તો દીકરો કહે છે કે હું તો જન્મ્યો નહોતો. I can say કે હું તો 5th standardમાં હતો. I was 13 years old when this whole process started. And I can say, use the word excitement. That's what I told Mukesh bhai, that I am here actually to listen to you. And I feel so happy and excited to be part of the story also today. And then Mukesh bhai has done this plan of a sequence where we want to also do have a fireside chat, which should be a little twist in the usual analysis of budget. So certainly thank you, Mukesh bhai. I would first like to thank you for having me over here. And certainly my whole career, I started with all this, ended, as Janil said, retired in April as a full-fledged professional Deloitte. I still continue to track this analysis of budget with Mukesh bhai. So it is always a pleasure, the way he articulates, way he presents, way he speaks. My role is certainly tax. I would not dare to get into, because here is the man who would do the tax analysis. But I would like to give a background and a little larger macros perspective, including the macroeconomic, including the global or the policy aspects of the budget, that I will try to cover in few minutes from now. Typically, of course, as the agenda, as I said, backdrop, I will say a little bit of how the allocation is done, and important to know that how the money is coming, going, and then the allocation, where is the capital expenditure, revenue expenditure happening, which is direct context to the economy and the growth and the vision plan that the Honorable Finance Minister mentioned as the Fixit Bharat Vision Plan with the 9 priorities. I'll also want to cover, and this is very close to my heart. When I did my PhD, it was more like economics than even finance. And I had done a lot of macroeconomic research, and thus, because it is close, it directly relates to the budget and the future and the vision. I will try to present some of the global aspects as well as the India context of the macroeconomic. And then finally, a slide on. So these are some 7, 8 slides, not more. I'm not going to bore you more with them. Typically, now what is happening is that there is context to the world. Context to the world, where one part of the world where there is the geopolitical issues, we can, whether we call it risk, whether in some context we call it a crisis, but certainly it has impact on the business, impact on the exports, impact on the imports, impact on the economy, impact on the currency, impact on the exchange rates that are happening. There are issues with some countries where the inflation rate is high, the interest rate is moving higher, and then a lot of people say it is peaking out. But it has an impact. If we were talking about a 5 trillion economy and we were talking about a 7%, 6.5 to 7% growth, then geopolitical risk and the background has to be considered, has to be kept in mind when the finance minister is articulating the budget and saying that this is the growth which we are talking about, and this would be the typical inflation that would happen. Climate challenge is certainly, climate challenge from the point of view of budget is, climate challenges can impact agriculture, climate challenges can impact health, challenges could impact, and there could be diversion of funds which could happen which otherwise are allocated. So this is the backdrop, and certainly I personally feel there's an uncertainty, and a huge uncertainty about AI. There's a belief that when the industrial revolution happened, the machines came in, people were worried that the jobs will go away. When the computerization happened, people were worried that the jobs will go away. AI is happening, people feel that 30%, this is written statistics, 30% of the jobs by 2030 will be no more. But that there could be replacement, people would have to skill, reskill, unskill, and then certainly get into. So chances are, but certainly there's a huge amount of uncertainty, both point of view of how the employment, how the economies, how the growth of economies from, and the human resources are going to be handled in the process of this AI coming big way into the plan, and naturally what toll it will take, and what skilling, reskilling will have to happen as a government as a whole, and the budgetary allocation for that. Crude oil has a permanent lifetime volatility, and India, 25% of our imports happen, money that is used for imports, which it directly impacts the current account deficit of the country as crude oil. And there's a gold aspect also, and I'm coming to gold aspect because in the budget, there's gold is reduced from 15%, in customs duty is reduced significantly, now 15% to 6%, but that is 5%. So 25% of crude oil, if volatility, that also can impact. Having considered this, the macroeconomic of India, the positioning of India, where are we in the, so if we look at the inflation, we are almost flat, and certainly compliments to our central bank, the Reserve Bank of India, who's managed the interest rate so well and contained, and has achieved, at least if not achieved the 4.5 or 6%, it has achieved the inflation rate very much in versus the best of the advanced countries with the best of the economies unable to do that. With peaking interest rates also, the inflation is still there quite high in so many countries, and I have one slide for that also. Other indicators, foreign exchange reserve, I have a slide I want to show where the foreign exchange was and where it is, and I would rather talk about and the demographic dividend. We are in the probably the best position, the most enviable state as the country, where we have the youth, the young crowd who are going to generate that GDP that we are talking about, the 5 trillion, and I would talk about 35 trillion in the Viksit Bharat 2047 also. So this is the background. Coming to the budget, and then on where the money comes from, where money goes, I will also come to the major policy, key policy announcements. So here, of course, these are two pie charts, of which one is for 23-4 and the one on the left is for 24-5. What you need to look at is blue to blue, light blue to dark blue is all taxes. So that's the collection. Where is the money coming in from? But the big pink is 27% of the money, which is almost 16 lakh crore of rupees, are coming from borrowings. So this is one point to keep in mind, and we'll discuss a little bit about the fiscal deficit also when we come to that fiscal deficit chart. So 27% is in a way huge, but then compare it with the 23-24, it was 33%. 33 paisa in a rupee in 23-24 was borrowing. 27 in a rupee is borrowing this year, and the taxes fortunately have gone up. There is one green thing which has increased significantly that you see as in the pie, and that is the huge dividend coming in from the Reserve Bank of India, which is, it may continue, it may not continue. 200,000 2 lakh crore, 200,000 crore of dividend is something which is huge, which government is starting with this new. The another part of the story is that this is almost the 6th month budget. So you cannot expect this budget to have the interim budget flew in terms of continued with the patterns of investments, including that 11.11 lakh crores of infrastructure. Here this budget, so effectively the chances of going wrong or investing more or investing less would be less in this budget, because the vision is more about 6 months. 1st of February coming, 6 months down the road, we will have another budget for 25-26. So this is one aspect that I wanted to draw attention, that there is a huge dividend coming in. Then where is the money going in? And the money is going in, of course, at several places, but the yellow in the pie chart is important for us to look at. The yellow colored pie is a significant pie, 19 paisa in a rupee. 19% is going only for servicing the debt, interest payments. Now 11 lakh crores as payment of interest in the money that is collected out of 48 lakh crores. 16 lakh crores of borrowing, where the money is coming from. That is significant part of the borrowing is going in only for servicing interest. So it's a huge amount. Of course, we look at the deficit, fiscal deficit going down year on year for at least post COVID 3 years that we have been. But are we 4.9 in a comfort zone? Is 4.9 in the fiscal responsibility bill? We were talking about 3%. And we are now at 4.9. We feel that we are in a good shape. We were 9.2 in COVID and became 6.4 and became 5.6, and now we are 4.9 versus the interim budget which talked about a 5.1% deficit. We feel even good that okay, 5.1 was for the full year as a vote on account versus a 4.9. So the finance minister has certainly done a good job, at least from the point of view of not increasing the debt, the borrowing. But this is one aspect where 11 lakh crore or a 19% of my whole pie that the money is spent is going into just in servicing the debt or servicing the borrowings that India has. Of course, there's a huge capital expenditure, revenue expense. That's the best part of the other part of the pie, which is this balancing of the capex and the revex, revenue expenditure and the capex, capital expenditure. 15 lakh crore, 11 crore, 11.11 lakh crore for infrastructure and 4 lakh grant in aid and others. 15 lakh crores effectively are building the economy, where all the capital expenditure are for a future long-term building of the economy. That's the part of this diagram that I wanted to say. Few policy announcements I will touch base. These were the 9 priorities. It's a very well structured. I would say this was one budget which I enjoyed reading from the drafting from point of view, from sequence point, or at least maybe I would say a symbolic feeling of holistic that the coverage that the budget gave also. And naturally, the government or the finance minister has to. These are some of the so many pages of the budget part A speech that I have tried to capture as the points here. but natural farming is going to be very important what we eat. And this is an example, I was with one very senior manufacturer of pesticides, and I asked him clearly that, do you eat the food that you buy from the market? He says, I wash it 2, 3, 4, 5 times, I don't know how many times, but I'm worried because I am manufacturing so much of pesticides which we all eat. And then maybe natural farming will be a way. And if that farmers are educated, given, and this is not going to happen overnight, this is a long term thing. Public infrastructure, digital public, the surveys, the crop survey, if it happens digitally, and which will ultimately also go into precision farming, which will be a huge benefit to farmers as well as the whole ecosystem, because ecosystem in farming also includes banks, also include insurance, everybody are stakeholders, because their money are at stake if the crop fails also. So digital, and of course the land records is big, the employee incentive, the contribution to EPF. MSMEs are very significant part of the growth of the economy, because huge amount MSME runs into crores of them. Large companies drive maybe 20-30% of the economy, but 70% of the, and that is where a lot of concessions, MSME, the credit guarantee scheme, the Mudra loans, even for non-corporate micro, that is what the Mudra loan is about. That's increased from 10 to 20 lakhs. And then the receivables, the trades is a SIDBI is going to increase, and then trades is going to be a factoring, which they have reduced the size of turnover from 500 crores to 250 crores. Creating clusters are going to be certainly helpful. Women importance is very important. Diversity, we will have to bring in diversity. Digitalization, which is also happening in rural, urban, training, infrastructure we spoke about. FDI, ODI needs to be simple. FDI, I am little concerned. FDI last year 2024 324, foreign direct investment has been 70 billion in this country, which was down by 0.5 billion. Now FDI decreasing, one is a issue. If this goes down, then the economy is looking at FDI gives in not only the money, it is not about the foreign exchange earning by way of foreign direct. With the foreign exchange, foreign direct investment happening in the industry comes technology, comes markets, because that guys who are investing money are bringing their markets also with us, who are investing money are bringing technology also, bringing their us giving employment also. So is FDI is a concern. The bigger concern of the FDI that I see is the repatriation of profits, because now the FDI investments which have happened over last 20 years of the FEMA regime, 2000, FEMA 2000, and now we are 24 20 25 years, now they are all becoming ripe, matured, where huge amount of profits are getting generated from the FDIs happened, and that profits going repatriated also has a strain on the current account deficit, or the balance of payment situation of the country. So FDI, unless and unless this is again once again given a push, I think that's going to be a negative situation continuously happening, and that certainly government cannot afford to in wonderful provision of skilling has been talked about since ages, this government, before this government. And the comparison is India is a 5-6% skilled labor force. The Europeans, the Japanese are 70-80% of skilled labor force. Now when we talk about a 5-6% and a 60-70-80%, we imagine how much gap it is for the skilled labor that we need to have. Now we have been this. Now this is one wonderful thing, an internship for a crore of the students or youth in 500 top companies. And then there's a mechanism which they have created. A CSR fund can also be used for the purpose. So I think that's a welcome thing, which would be probably giving the right kind of skilling that we would need, who would become in the right sense employable, so that employability is there. And then there's a space economy. I'm not getting into the framework of laws, etc. Coming to a few 4 or 5 of the macroeconomic. First I will take a couple of the global thing, that global real GDP has gone down 3.5% to 3.2. One thing we have to understand, that post COVID, naturally COVID was a drop for every single economy. Most of the economy was in minus. India kind of economies were almost at a 2-3%. But then this average global GDP growth was 3.5, which came down to 3.2. 11 to 19 average was also 3.5. And then I'm coming to comparison. global inflation is 6.8%, and then I'm coming to what India is, and the export volumes have dipped significantly. So effectively the global situation is certainly negative. On fiscal deficit also, I don't have a chart here, but fiscal deficit, almost every company, large economies I'm talking about, advanced or emerging, including Brazil, including Russia, including South Africa, they have increased that fiscal deficit in terms of percentage to GDP, versus India and China, the only two economies in the world where the fiscal deficit has reduced. So that's one positive aspect, because this is more psychological also. Maybe, I don't know, I 4.9% may still be huge, but at the same time, when we talk about reducing, there is a the trend, there is the way that the Indian responsibility, or the prudence as we call it, as fiscal prudence is happening, that we, at least we are not into a borrowing cycle. That we may get into a debt trap or not. Global economies are all debt, huge debts all over the world, versus India doing this. Inflation, if we look at, this is world, red is world, A is advanced economies, EMDA is emerging market and developing economies, where the inflation is stabilizing. We are much lower than the 8%. And important part of the policy rates, the rates which are effective, is, if you look at it, the rates in Japan is so low. US is lower than India, Euro is lower, but then the context is that white bar of the bar chart to the red or pink bar, then to green. The US was 0.8% interest rate. Now it is 5%. Now 0.8 becoming 5, versus India, which was 4%, becomes 6.5% as our repo rates. So 4 to 6.5 versus 0.8 to 5, you can understand the impact on the economy. The largest of the large company, if they have 3% more to shell out as interest, I'm talking here, it is 4 plus percent. You can imagine the burden that will create on the economy for the reinvestment, because the cash flow is going away in servicing the debt. So Euro 0%. Almost all the Eurozone companies, advanced economies, France, Germany, they were 0% interest. They are now trading at 5%, almost 4.5%. And Japan was negative interest. There was a minus interest in Japan, which is now at plus 0 point something. China is the only country where they have reduced the interest rates over a period of last 4 years. This is another very important from a macroeconomic chart that I could find out. I could find. US is a $28 billion economy. China second, 18 trillion, and then there is Germany, Japan 4.5, 4.1, and India almost 4. Now looking at the PPP, purchase price, purchase parity, that purchase parity, India is already third, and at 14 trillion, as compared to Germany and Japan 6 trillion, or UK and France, we are already overtaken even as the normal nominal GDP. So the point to drive here is, at 4 trillion, we are growing at a 6.8% growth. At a 28 trillion, there is a 2.7% growth. The concern is only about the per capita. So this is where the economy and the developed economy stage that we want to achieve is little far, because we cannot achieve just in terms of numbers. 4 trillion will become in next 5 years more than all the German, and maybe less. 5 trillion economy will happen much sooner. But then we would be the third, because they are not growing, only 0.2% growth at Germany and 0.9% at Japan. So India is almost there as a third largest economy. Only thing is the focus in how the prosperity happens across the largest populated India that it is now. This is an important thing in GDP growth trend. The curved line, which is the real GDP growth, is about 8.2% last year, the Q1 of 2024, and then we are projecting at 6.5 to 7%. 6.5 to 7. And I did an analysis. I was doing a math on the Excel sheet, where I said we talk about a 35 trillion economy in a developed India 2047, and what do we have to achieve as a compounded growth rate? And I could find the number of 9.5 nominal GDP growth rate to achieve at that. Means if I take out a 4% of inflation, then real GDP growth rate of 5.5% can also take us to that 35 trillion in the next whatever 23 years now. So this is a huge trend. If we look at, of course, post COVID, not worth looking at, because there was a down and then there is up, minus 6% plus 10%, but then 8.2. Now we stabilize. Going further, the indication by the finance minister is 6.5. And this is an important chart. After that, I will just conclude with one more slide. This is a very important chart. Important chart from the point of view what I started with my analysis, that 9.2 GDP of fiscal deficit, 9.2% of GDP as fiscal deficit post the budget of the finance minister after COVID was fine, because the globally there was need to borrow, that naturally there were dip in the earnings, etc. Became 6.7, became 6.4. So the trend has come down. And then in 24 provisional actuals, we need not see 5.9 and 5.8. The 5.6, it has actually, we have achieved that. Now we are talking about 4.9 versus an interim of 4.1. But I want you guys to go back in 13-14 up to the 18-19 pre-COVID era, or 19-20. The deficit, fiscal deficit, was never 4.9% of the GDP. It was always contained below, and the responsibility bill wanted it to achieve 3%. So 4.9 also today, if we are very happy because of the trend, because of the continuous reductions in the deficit, but still it is high. We are not worried about a debt trap, because fiscal deficit is about debt trap, and all the eurozone crisis happened because of the deficit and spending and etc. As of now, because the growth rate is high, but then this certainly is not a matter of not concern. That is what I would say. The expenditure we discussed, inflation we discussed. I don't want to repeat or spend time. This is one chart, very nice. It is certainly music to ears and certainly looks good to the eyes, that we were a $20 million forex reserves. And the gentleman, on the 24th of July 1991, today is 24th of July, right? 24th of July 1991, we were hand to mouth when Manmohan Singh said that we will have to swap this, and then the liberalization era started. Then we were having almost no forex reserve as India. Today we have a 600, and last week, the week ended 15th or whichever of July, we were a $666 billion, second largest economy in the whole world with the forex reserve of $666 billion. Third is Russia, but then Russia has concerns right now. What will it do? Where the forex is stuck also, how will it? And China is a 3 trillion forex reserve that it has. So China 3 trillion, India 666 or 652 at the end of. So we have achieved a significant strength in terms of the comfort of imports for almost next 1 year. That will happen in spite of, if at all there are volatility. The last slide. Third, as I said, FDI is a concern to me unless there is a push given, something major given, some sectors, some policies, ease of doing business, and one-stop shop clearances, etc. Otherwise, this FDI can convert into a negative situation for our current account. Repatriation, I discussed. Fiscal deficit, we discussed. I want to hear this gentleman. So I'm trying to just, because I'm here to hear him and not just keep on speaking. And then certainly this savings is a big concern. Saving. We talk about a new regime, and I'm going to ask you the question. That would be my first question, sir. This new regime, taxes rationalized, very simplified, but then I don't need to put any PPF at all, because ATC is not there. If I am in that new regime, I would rather use that 1,50,000 rupees to buy a mobile iPhone Max. This is what, are we disincentivizing the savings? Is that Indian culture? So what is the, so where are we moving? Are we moving in the Western climate at all? Gold, very big concern. Of course, very good move by reducing, because huge amount of gold was coming the ways otherwise than the formal ways of customs duty. 15% was a huge, the difference between India and anywhere gold rates were so much. But now for last 10 years or maybe 15 years, government has taken one stand that please that gold should be reduced. Gold is one asset which is treated more or less as a dead asset. It is lying in some lockers. So government also came into a sovereign gold bond scheme that it can become productive when it comes to government, and then you all only have a financial asset in your demat account as a gold bond. But then by reducing this, there's going to be increased gold purchases also. One, two is that which is a dead asset which doesn't contribute as much as the to the economy. Point number two, gold when it is bought, it is 5% already of our total foreign exchange import bill, which is a huge amount. This is probably the second highest bill after the crude 25%. Now, can I afford to increase the current account deficit for some crude oil? No choice about it. But by having gold in place and then reducing that or further having a deficit because of the asset which otherwise, so maybe government would have done all their math, but this move will increase purchase of gold, which is not a productive asset, which is known, and it was discouraged over a period of time. But certainly government would have known that enough gold or more gold is coming by other routes, and that could be the reason for this survey. GDP, I'm not going to discuss. We've discussed enough. Viksit Bharat, GDP assumptions going further. IMF assumptions for all the 10 years over 6%. And thus that 35 trillion economy is happening. The inflation between 4 and 6, it looks like the monetary policy of the Reserve Bank of India governor has always said that we want to trade cautiously. I cannot release the rates till the time we are sure about how the movement is in terms of inflation. And thus the repo rates and inflation are also fabulously. Probably India is a case study for the whole world when it comes to the inflation, that the way we have tamed or the trajectory that it is, and the rates which are also contained. That's probably my part of the story. We now move on to a better part of the story. Thank you, guys. Over to our 44-year-old gentleman.
Good evening. And Savan Bhai, the problem is with your name. Savan, a delight to listen to you. We've had you welcome, greet, and cheer our speakers over the years, and it's heartening that you are here with us. A wonderful vision and perspective. In fact, while you spoke about July 1991, I was reminded because that time AMA was not here on this premises. Yatindra Bhai will recall that we came here in 97. But 91, I think that was the budget, if I mistake not, when we had our budget meet. That is the year when I had actually, my mainstream started from 81. It was just about a decade. And 91, I had joined as the programs committee in charge. And we had our budget analysis there in Bhaigaka Bhavan. And I distinctly recall, the thrill and excitement. And therefore, since then, whenever it's a finance bill, I say there are always chills and thrills. Because the finance minister has something or the other to offer. Well, 44 years down the line, my spirits are the same. Of course, whatever transformation has taken place is here. I don't regret that because I have so many of my other friends also whom I have been seeing over the years. doing similar kheti, if I would call it. Jaju sir, Dalit bhai. So, friends, let me straight away start because today I felt and I was right in my guess that it is going to be a budget on which we would very much want to brainstorm with those nitty gritties, you know, because every budget carries its googlies, as they say, and there are a few of them. So we would like to delve deep into that. And fortunately, the way the program is structured today, I think we are going to have time to be able to take your questions, queries, and also discuss them in the fireside chat. I will focus on tax, obviously, because the economic overview has been given. Friends, let me tell you, there was a time when income tax collections were a very small, meager part of the union budget from where the rupee comes, and then you have to really find, that in the pie, that small little fraction of income tax. And today, income tax collections, not only that they are the highest ever, in fact, in just about 4 years, the tax collection, income tax collection has doubled. The, the estimated budgetary collection of the current fiscal is estimated at almost 24 lakh crores. And income tax has become a very robust and healthy part of the entire budgetary revenue. So gone are those days of 97.5%, which exactly some 50 years ago, 74, we are in 24. Exactly, it's like the uh, emergency 50 years are going to be celebrated or remembered, shortly. But I distinctly recall when I was a law student and I started, that was the time when it was 97.5 and the collection was a very small fraction. Today, the rates, and as I'll take you, the rates have liberalized to that extent. Collections have swelled. The entire mechanism of collection has become so automatic. And frankly speaking, taxpayers have no choices because this three-letter word AIS and TIS uh, is just enough to make you alert. Because now, as they say, you should know everything that the department knows about you. Because if you don't do that, you are inviting trouble. Friends, even officers of the department, I recall, when AIS came in, they used to tell me, because I always used to plead IT for IT, and that was when information technology comes for income tax department in its true sense, it's going to bring a revolution. And we have indeed a revolution when I think how many of you, if I were to ask you, you even got your tax returns on the very same day you filed the return. In fact, there are people who got it in the very same hour they filed the tax return. So, things have moved so fast. And therefore, in this digital era, friends, now what is the focus? I want to start with the tax rates as we always do. It's simple this time because as far as corporate rates, as far as tax rates for firms, LLPs, nothing has changed. It is all about this budget, primarily on the income tax front, is primarily about the personal taxation. And obviously, after a long time, the capital market has also been very much into the scene. So I'll start with now what we call the old versus new. It all started from 2020 and it's been now 4 years. Old, new, જૂની નવી. આપણે શું કહીએ કે જૂની જતી નથી ને નવી આવતી નથી. We often say this. But now it's time for the old to go and the new to really stay. Because the old is no longer gold and the new, I think, even as the finance minister herself said, almost 2/3 of the taxpayers have switched over to the new. In fact, the first 2 years, the new was virtually a debacle because there were hardly any takers for that. But with the objective of really stimulating and popularizing the new scheme, they started giving not just incentives, but I would say robust and healthy incentives. And if I have to tell you, friends, let me show this to you with a chart. Here is comparison of tax liability under the new tax regime of what we call as section 115 BAC, and I have taken the last 3 years including this one, 22, 23, 23, 24, 24, 25. And friends, if you take a look at this, you will see that on 15 lakhs in 22-23, you are paying a tax of 1,95,000. I have taken a non-salary taxpayer to take a very neutral view. In 23-24, in a single year, the tax was slashed by almost 39,000 rupees. And in 24-25, there has been a further reduction of over 10,000. So, in absolute terms, in 2 years, for a non-salary taxpayer, the tax relief is 49,400. And if I were to add what was given to salaried taxpayers last year under the new scheme, 50,000 rupees, and this year, another 25,000, about which we'll talk a little later. Actually, friends, in 2 years, last year and this year, the finance minister has given tax relief of 72,800 rupees to a taxpayer who is in 15 lakhs and above bracket. Never before in the history of Indian taxation or Indian budgets has such a healthy, robust relief been given. And as I will show you very shortly, friends, the tax rate as a result has gone to something which you would say is anybody's dream. Now just imagine and take a look here, tax impact for salaried SSC under the new regime. I have taken a figure of 16 lakhs, the middle class salaried man. And from in 22-23, you did not have any standard deduction. 23-24, 50,000, 24-25, 75,000. And keep in mind, friends, until last year, standard deduction was for the old and new the same amount, 50,000. Now, this budget, everything that has been given by way of a relief is only and only for the new. So you have to start forgetting the old. And this new 75,000, if you take the taxable salary after that at 1525 and take the tax payable along with the cess, the total tax on 16 lakhs, which was in 22-23, 2,26,200, which worked out to 14.14%. This time it has come to less than 10%, 9.59%. And keep this 9.59 into mind because I'm going to refer to that even a little later. Friends, we now go to another very interesting chart as to, because now people have been talking what is more beneficial. We keep on getting my friends who are in the profession, Upendra bhai, bada puche, juni ke navi. Huh? Navi rakvi. Ame navi rakvi game. Huh? But you have no choice because juni have chalwani nathi. Friends, just take a look at this. There was a time when the scheme was introduced, something around 2,50,000 was the break-even point in the maximum tax slab. Now, when this chart is only trying to show you that if we have a taxpayer who has, and again I have taken a non-salaried, if he has income of more than 15 lakhs, and you ask which tax regime is beneficial, the 2 lakhs, 2,50,000, 3 lakhs, in all these cases, even if you have deductions of all these amounts, still the tax benefit is there under new regime 62, 47, 32, 17, 10. It is only at 4,08,333 if you are able to garner deductions to that extent. So practically you would need a housing interest loan, and you would need a 80C, and you would need a 80D, and all put together may bring you around 4 lakhs. Now there will be very few rare cases. So therefore, 4,08,333 you have to keep in mind. If you are 15 lakhs and above, and 4,08,333, this is it. In fact, last year, what was done was even the rebate, they made these two different streams. For the old, 5 lakhs was the threshold, and the rebate is only 12,500. In the new scheme, 7 lakhs and 25,000. People have been asking, rebate still continues? Of course it does. The rebate has not been disturbed, and therefore you will not pay any tax if you have regular income, not the LTCG from equity, because 112A does not get you any rebate benefit, etc. But 7 lakhs is that threshold where it's a zero tax situation. 4,08,333, remember this as a cutoff, your break-even point. And keep this in mind, because based on this, friends, now I want you to go to the next slide, because this year, as you know now, the tax rates have come from 3 to 6, 6 to 7, 7 to 9, 9 to 10, 10 to 12, 12 to 15, in 5, 10, 15, 20, 30, right? There is one more slide before I take you to this capital gains, but on the aspect of the old versus new, friends, keep in mind, I am going to point out to you that there have been two very important reliefs, and that I'm going to talk about. These slides were mainly for those calculations or computations where looking at numbers becomes easy. Now, what are those two important reliefs that have been given in this budget? First is obviously the standard deduction, as you know, 25,000 higher for salaried and pensioners. And if you are in the 30% tax bracket, that makes 7,500. So 10,000 on account of rates and 7,500 for standard. So that's how the finance minister reminded you that you can take up to 17,500, right? But a very important benefit for the salaried class, which has come in this budget, is in regard to the NPS. Jaju Sahib, I remember just some time ago, IIM had come to me for an opinion as to whether we can get up to 14%, whether, we should be treated. And then there was this Supreme Court judgment in IIT which said that no, you are not. So everybody was feeling, why this discrimination? NPS, as you know, the new pension scheme, when the government contributes to the employee's account to 14%, that is not treated as a taxable perquisite. It is completely exempt. But when anybody in the private sector or PSU or banking, for them the limit was 10%. So this discrimination was being really criticized and also represented that it should be removed. It's a welcome provision that it has been removed this time, and now every employee across the board will be able to get this. And for salaried, garnering up their retirement benefits at a time. Let me give you a small example. Say, for example, there is an employee who is having a package of, say, 50 lakhs. Earlier, at 10%, he could get only 5 lakhs, which his employer would contribute. Now, at 14%, he would get additional 2 lakhs. So he would save an extra 60,000 rupees apart from the 17,500 that he would now. So this is, for those who are in the salaried sector, private sector, and I think more and more employers in the private sector are appreciating this and they're trying to, give this benefit. Of course, as you know now, under the new scheme, your 80 CCD employees' contribution does not really help you. But the employer's contribution, whether it is old or new, keep in mind that the exemption to the employer's contribution very much continues. So you will get a benefit to that. There is one more welcome provision because there are very few reliefs otherwise in substantial part, and that is in respect of the abolition of angel tax. The provisions of section 56, subsection 2 and clause 7b. This was a provision which came in a few years ago, and since then we've had so much of litigation because what happens whenever there is a company, a startup, startup tries to value its whatever intangibles, this, that, etc., and then it offers shares at a premium. And 56 to 7b provided that if the shares are offered at a premium which is higher than a particular value, and then very complex methods of valuation were brought in, and as a result there is so much of litigation which is already pending. I wish, for ending that litigation also, an equally broad view is taken. But one good thing is 56 to 7b from the current financial year, a sunset clause is introduced. So whether it's a startup, whether it's any other company, nobody will have to face the music of the department on the ground that you have issued shares at a value higher than, because it's always something subjective and relative, right? So these are some of the few reliefs, friends. I would now want to go to what is perhaps the most talked about, and that is capital gains. Capital gains. Friends, before I come to my case studies and talk about them, in fact, uh, you know, I want to tell you what are the key amendments or changes that have been made. One is, of course, the finance minister said in the name of simplification, she said that we are now going to have only two holding periods. One is 12 months for equity, which will be long term. If it is more than 12 months, short term, if it is less than 12 months, and if it is other than equity, because we used to have earlier 2 years and 3 years, as you know. 2 years were for immovable property and unlisted equity, and 3 years for the remaining kind of assets. So they have now removed the 3 year block. So it is 1 year or 2 years. So 1 year is equity, 2 years is all other assets. Now, the second aspect is, the finance minister's eye came in on the fact that investors were earning in the markets. And markets, in fact, 4 years ago, I remember in 20, when we had COVID, the markets had gone down bottom to as low as 20,000. And in 4 years, the Sensex has zoomed up to almost over 4 times, crossed the 80,000 mark. So the question is, well, can you really find fault with the FM if she wanted something out of your earnings, and which were earnings for which you didn't really have to sweat also? The poor salaried or professional or businessman, he does sweat also. Here there is no sweat. So, it's difficult to find fault with the rise in the tax. And as you know, what is the rise they have brought in? But there are other aspects. So I'm not supporting absolutely what has been sought to be proposed. We have three sections for capital gains. And I think capital gains is something most of you understand fairly well. What is the section which deals with short-term capital gains on equity shares and equity-oriented mutual funds? What is that section? 111A. That's right. And the rate under 111A used to be 15%. I said used to be because it's history now. 22nd of July was the last day when you could have thought 15%. From yesterday, it has been raised to 20%, right? 112A is another provision which we all remember, and that is long-term capital gains. Long-term capital gains, the rate was 10%, which has been raised to 12.5%. And of course, as you know, there was under proviso to 112A a provision that 1 lakh of an exemption, in the sense that if you had to pay tax, tax on up to 1 lakh was allowed as a set off against the tax that you had to pay on your capital gains. So that 1 lakh has now been raised to 1 lakh and 25,000. And this is all from yesterday itself. The third provision is 112. Now, 112 is in fact the oldest provision which was there, and that is in respect of other assets. So if it is not 111A or 112A equity, then all other assets, namely unlisted equity. Of course, unlisted equity, the provision is the choice is given to the taxpayer. It is 10% without indexation or 20% with indexation, right? And all other assets your immovable property, land building, etc., gold, jewelry, ornaments, practically all assets which are capital assets, they are all covered under 112. Now, what has happened is, friends, just keep in mind, I want to, I'm just giving a very simple example because it doesn't need a chart also. Just try to understand the implications of these provisions. And the first provision is take short term capital gains. And I have a fundamentally strong view on this. I think this rise from 15% to 20% is going to affect the common taxpayer quite harshly. Of course, being a true Ahmedabadi myself, and also appreciating that you are brother and sister Ahmedabadis, I am duty bound to show you the lawful way out as to how you can do it. And more so on the forum of AMA, which is my own alma mater. I think, and we'll have something very absorbing. And what I'm going to share with you, you will remember and you would want to share with all your brothers, sisters, friends, colleagues, because no media has talked about this. This is something completely thinking out of the box. But first, let me come to where the shoe pinches. We have what we call as a memorandum explaining the provisions of the finance bill. And that talks about why an amendment is brought. Right, Dinesh, right? That's what it is. So, in this rationalization and simplification of taxation of capital gains, there are two lines where it is mentioned that the present rate is too low and the benefit from such low rate is flowing largely to high net worth individuals. Now, my question is, leave apart the high net worth individual, but the small man, he cannot be penalized. See, what is going to happen? Take case, there is a taxpayer individual who is he's just retired and enjoying his retired life with some interest in the market. And he earns, say, 10 lakhs short term capital gains. 10 lakhs short term capital gains. Now, as per the new rates which you saw, I just showed you in the chart, on the first 3 lakhs is zero tax. On the next 7 lakhs, which are the short term capital gains, what will be the tax at the rate of 20%? Now it will be 1,40,000. 1,40,000 on 10 lakhs. The average rate is 14%. While the average rate which we saw in the case of even 16 lakhs income, it was 9.59%. Okay. So this 1,40,000, which used to be earlier at 15%, because that 5% means he is paying 35,000 more than what he used to pay. And it's going to pinch him. And more so, because this 15% was introduced when? Do you remember 111A was brought in by Mr. Chidambaram in those days, when the tax rates after 5%, the next slab rate was 20 and then it was 30. At that point of time, having this 15% was just about okay. But now, until 12 lakhs, what is the slab rate on 10 to 12? It is 15%. 12 lakhs to 15 lakhs of income, the tax is 20%, and above 15 lakhs is 30%. So, when my marginal rate is also not that, here I am required to pay tax at this rate. Now, what do I do? You'll remind me, Mukesh bhai, તમે promise કર્યું હતું કે અમદાવાદી વાળી ક્યાં છે અમારી વાત આપો. And the Ahmedabadi thing is, you know, he will always want to take, not give. As they say, somebody was, drowning in the Kankaria lake, and those firefighting authorities went to save him. અલ્યા તારો હાથ આપ. ના આપે. કેમ? માગીએ છે મારી પાસે, હું શું કરવા આપું? ભાઈ લે પકડ મારો હાથ. પેલા એ તરત પકડી લીધો, and he was saved. So anyway, that's in the lighter vein. But if I were smart, and I don't think any taxman would be able to do anything to me, what would I do? I would have 10 lakhs of my capital gains, 3 lakhs exempt, 7 lakhs. I don't want to pay 20%. I want to pay tax on short-term capital gains at the normal rate, because any other short-term capital gains would have attracted what? The normal rate of tax. So if I want to attract normal rate of tax, what do I do? 111A says it attracts tax of 15% or 20%. Why? Because you have paid STT. And that's why you fall under that. But suppose I do an off-market transaction, off-market, from my demat account to, say, the demat account of any of my family member or some friend. If they buy shares from me at the same market price and I do an off-market transaction, it will not fall under 111A. It will be nonetheless short-term capital gains, attracting normal rate of tax. So what will be my normal rate? On 10 lakhs, don't worry, this is not going to be plugged. It's too ingenious to be able to be tampered with. On 3 lakhs, zero tax. On the balance 7 lakhs, because 3 to 7, attracts 5%. So on 4 lakhs, it will be at 5%, 20,000. And on the remaining 3 lakhs, at 10% would be 30,000. So 20 plus 30. What tax will I pay? 50,000. This one brilliant idea of doing it smartly and thinking out of the box. And then, my family member can sell off those shares, and then the balance, gain, if at all any, they'll pay tax at whatever. Because there is no condition that you must pay STT. You can always have as far as short term is concerned. Long term, there are certain riders because of those penny stock provisions and all that. But here, there is no embargo. So compare 1,40,000 and 50,000. In fact, the maximum saving that you can make is if you take 12 lakhs, because that is the threshold when the rates even out. It would be 1 lakh of saving. So you can save up to 1 lakh of short-term capital gains. Frankly speaking, some solution must be found to this. And while they may want to tax those who are in the higher brackets, earning substantial gains, at a bracket of 20%, I think for the small-time investor, telling him that though up to 12 lakhs, your marginal rate cannot exceed 15%, you will have to pay tax at. It's not fair. I think this is something which really requires thinking out of the box, even on part of the FM, how they are going to resolve it. Friends, the next is, the In fact, yesterday, when this provision was announced, and they said in the name of simplification, we just as we are going to have only two holding periods, 1 year and 2 year. So they said we want, one rate for short term, one for long term. So they said long term, now we want to bring in a 12.5% rate across the board. So for 112 from 20%, they brought it down to 12.5%. The finance minister in her speech did not utter a word about what was, because otherwise it's always peli phududi hoy, terms and conditions attached. So what was the TNC with this? Indexation is gone, gayab. And the moment, this was there in my lurking doubt in my mind, the moment I got the finance bill, the first thing I said, let me go and take a look at section 48. And the proviso was tampered with. So indexation gone, 12.5%. Now, this is frankly speaking a double-edged sword, and I'm going to show you two case studies, which in fact, today my son Jigar, in fact, I borrowed from him. He put it in Ahmedabad Mirror this morning. The first case study, take situation of a property. You can take a look at the example. The fair market value as on 1/4/2001. Now, in order that there is no confusion, let me tell you, fortunately, the provision under section 49 that, you will take by way of a special cost of acquisition provision, if there is any property or any asset which is older than 2001, it will be 1/4/2000. That provision stays. Yesterday there was a lot of confusion on that, but it is not disturbed. So on 1/4/2001, 25 lakhs, the indexation, as you know, in 2001 was 100, now it is 363. So straight away that 25 lakhs gets indexed to 90 lakhs and 75,000. And if I sell the property for 1 crore, the taxable long-term gain is 9 lakhs and 25,000. And the tax on LTCG, which is 1 lakh and 85,000. You are quite happy because your tax with reference to the sale consideration is less than 2%, right? Now here, just take a look, friends. 25 lakhs, because you're not getting any indexation, your taxable gain is 75 lakhs. And though from 20 it scaled down to 12.5, at 12.5 on 75 lakhs is 9 lakhs 37,500. Almost 5 times the tax that you would have otherwise paid. Now, what could be the solution to this? Take 112. 112 itself provided that without indexation, it was 10% and with indexation, 20%. I think in such kind of cases, the taxpayer should be given the choice. Let it be 12.5 or 20. Let it be 12.5 or 20 at the choice. 12.5 without indexation, 20 with indexation. Because there would be cases, case study 2, where you would be happy with this 12.5. Here I am taking an asset, the cost of which was 10 lakhs. And because it was acquired in, sorry, here there is a mistake. It should be, actually 20, 1/4/2001, 10 lakhs. It is indexed to, no, it's 317. I think there is a typo. I'm sorry. It should be 2021. I beg your pardon, not 2001. Cost as on 1/4/2021, based on that year of 2001 too. The index cost would be 363 into 10 divided by 317. So So forget that 363 and 317. If you take that ratio, that will be exactly 1.145. So it will come to 11 lakhs and 45,000. And therefore, the sale consideration, if it is 20 lakhs, your taxable LTCG is 855, tax would be 171. Comparing it with 12.5, it is 120. Now, here I want to make an observation. This morning in the papers, you must have read the finance secretary is saying that 95% of the cases are going to benefit because of this 12.5%. With utmost respect, I beg to disagree because in case most of the cases of property transactions, I think this is going to be a very hurting provision. And therefore, the finance minister herself in the interview said yesterday that the object was not to raise revenue. So if that is so, then indexation, why is it being, who brought in indexation, friends, historically? In 91, the credit for bringing in indexation should go to Dr. Manmohan Singh, 91, 92. Because he said, as an economist, he realized that when you are talking of, you know, take this example, the earlier case that I gave you, in 2001, what you could get for 25 lakhs, the same apartment, if you had to get it today, it would probably cost you 1.5 to 2 crores. Yes or no? So, the value of the rupee has fallen such. And, in that situation, the only comfort that you can get in terms of capital gain is indexation. And in so many global economies, you have this. In fact, in UK, let me tell you, the exemption limit is linked with the cost of living index. So, every year they say the basic exemption limit will automatically be raised up. So this is something, it's a fundamentally economic. And then what hurts is when bureaucrats write like this. Just imagine what is the justification they gave. They said simultaneously with rationalization of rate to 12.5, indexation is proposed to be removed for calculation of any long-term capital gains, etc. This will ease computation of capital gains for the taxpayer and the tax administration. What are you talking? What are you talking? આપણે શુદ્ધ ગુજરાતીમાં મશ્કરી કરો છો? કોની મશ્કરી કરો છો તમે? What has been going on from 91 until now, and it has been rationalized. I remember when I was part of the Ishwar committee and we went to Jetli ji, and this earlier it was 1981, if you recall. Then it was brought to 1/4/2001. All these in the name of simplicity and rationalization. If you are trying to bring in such iniquitous and harsh provisions, I think at least refrain from doing that. And this 95% is something which cannot be accepted, friends. Okay, on the sidelines, I would like to mention that if we take a look at gold, I think that's all about slides. Then I'll be running through the provisions quickly. Gold is interesting because remember this. On 1st April 2001, guess what was the price of gold? 4,190 per 10 grams. Anybody sitting here who got married early in the 1970s? Raise your hand. 1970s. Yes. What was the price of gold? Huh? કેટલા? ના, એ તો વધારે છે. It was 100 rupees. 100 rupees per 10 grams. 75 માં પછી બધા હું early 70s કહું છું તમને. So the gold, and today gold, of course, it went up and then came down. But yesterday, the gold price was 72,210. By indexation, the gold price would be 15,209. Now, in this case, you would marginally be saving some tax because, until this, amendment came in, you were paying 11,400. Now you are going to pay. So actually, this 12.5, it's difficult to say or make a bland statement that it's going to help or hurt. It all depends on the facts of each case, but keep in mind that there are going to be situations where it's going to be tough. This budget has hit, what was almost the darling of the stock market, buyback of shares. But then, as it often happens, the FM has told you કે ભાઈ હજી કઈ વાંધો નહીં, 2 મહિના ઉપરનો ટાઈમ છે. Because this provision, friends, is going to be amended only from 1st of October. So you will find buyback નો હજી તો મુશળધાર વરસાદ આવશે. અહીં વરસાદ અટકી જશે ને સાવન તો પણ. Because this is the last time opportunity. And when you talk of it, why not? Because most of the promoters are paying tax on dividend in the bracket of with surcharge 39%. And your this buyback tax on distributed income is 23.296. So there is an arbitrage of almost over 15%. Well, people are going to run for it because after that, it is going to be taxed as deemed dividend. And you will need at least more than an hour to understand the formula they have given, for deemed dividend. But don't bother because nobody is ever going to, go for that deemed dividend provision. Arbitrage funds, they have been saved. It was being widely believed that they could have been hit, but they have been saved. But one good thing they have brought in, and that is an amendment to the definition of the specified mutual fund. Now, here they have included the market linked debentures and bonds, from those, from the meaning, for purpose of meaning of the deemed short term capital gains. The good thing is there were these gold ETFs, fund of funds, etc. They needed to be, taken out and put into the equity basket. So, these international funds now, there you cannot say that they have put in more than 35% in equity. So they have reversed the definition and they have said now instead of looking at 35% of equity for an equity fund or otherwise, you look at if the more than 65% is in debt or money market, we will take it by that definition. It's a smart way of doing it, but it's a welcome provision. FNO. Friends, FNO, obviously the eye of the finance minister would be on FNOs because retail FNOs were really picking up in a big way, and therefore the securities transaction tax has been raised. Option in securities from 0.0625 to 0.1, and futures in securities from 0.0125 to 0.02. So this is what is as far as FNO is concerned. The capital market part is almost done, friends. Quickly, some few rationalization provisions of TDS. I think they are welcome. The TDS rates for a number of, the sections ranging from the payment of insurance commission, life insurance policy, lottery tickets, commission, brokerage, even rent, and then the rent to individuals, HUFs, e-commerce transactions, all these, they have been reduced. For all those in the 5% bracket, they've been scaled down to 2%. What was there in 1%, the e-commerce transactions have come to 0.1. And the mutual fund unit trust repurchase of units, TDS, has been abolished. So I would say these are welcome provisions. For the salaried, what they have done is, because salaried taxpayers sometimes they get to have the impact of TCS. Now the question is, in computing their tax liability under 192, when you take the TDS, should you consider the TCS? Because suppose he has made a LRS, to some of his son or daughter. Well, they have brought in a provision that for TCS, they will be eligible to claim credit. In the case of minor, if TCS is paid, if the income is being clubbed in the hands of the parent, that will also be considered. Friends, they have finally spotted something, which is TDS on payment of salary, remuneration, interest, bonus, commission to partners. Because this was one thing which was earlier never within the TDS net. And they say that if it is more than 20,000 in the financial year, now sometimes, I say that what was being done earlier, partners were required to pay actually advance tax, right? You are paying advance tax. Now, what are they doing here? By providing TDS, you are paying at the end of the year. You sometimes ફ્રેટ કે ભાઈ આવો વિચાર કોને આવ્યો? તમને વર્ષમાં 4 વાર મળતો તો ટેક્સ, એની જગ્યાએ તમે you have pushed it to the last day, because it would always be credited to the account on the last day and then paid in the month to follow. And if you are smart, you would say no, 10% નહીં, અમે 30% ના બ્રેકેટમાં જે 30% TDS કરી લો. Then for 234C also, you will never come into trap. So I don't know, they have done it, it's fine, but what is it that they are going to gain from this? Friends, TDS on sale of immovable property. Now keep this in mind, until now, if there was a property which was jointly held by co-owners, say a property valued at 1 crore and 60 lakhs, and there were 4 co-owners, 40 lakhs each, and you are buying a property. What do? To each co-owner, you are paying less than 50 lakhs. So you are not required to deduct any, they were not required to deduct any TDS, when you are purchasing. Now they say that irrespective of the fact, if the value of the transaction for the property purchase or sale is more than 50 lakhs, it will attract. After so many years, finally they realize this. I think there is nothing wrong in principle, because I remember, as far as these farmers are concerned, sometimes you have farmlands which run into a couple of crores, and then every owner, કારણ કે એમાં રહીબેન, અમથીબેન, ચકીબેન, પેથાભાઈ, શકરાભાઈ, બધા કેટલા લોકો હોય કોર્નર્સ, જેટલા લોકોના નામ 7 બારના ઉતારામાં હોય, everybody would get their share. And you will have a tough time to catch hold of anybody. So finally that is there. Friends, your floating rate savings bonds of the government of India have also been covered. So they will attract 10%, section 193 interest from securities. TCS you currently pay if you are buying a car more than 10 lakhs. Now they say, why just a car? Any notified goods. So if there are other, you have home theaters, you have luxury watches, you have many other things. So they will all, once they are notified, if they come into this 10 lakhs plus, then that comes. Friends, when we studied history in school, you all remember Muhammad Taghlaq? What what is known about Mohammad Taglak? Yatindra bhai? Delhi thi Daulatabad and Daulatabad to Delhi. That has happened this time over again. You'll ask me how? From 1995, from 1st of July 1995 to 31st May 2001, for 6 years, you had what was known as popularly in those days the block assessment scheme in cases of search and seizure. Avakwera daroda omate, right? And they were sections 158 A, B, C, D, etc. Practically, and then we had later on two different kinds of schemes, and finally 2 years ago they said we'll take it into the regular assessments. So the search and seizure assessment, you really get stressed when you have to remember kyare padi thi search, kaya scheme mark te vakhate, which was the scheme of assessment. But anyway, we are going back now to the good old block assessment. You'd ask me, is it good or bad? I would say it's good. The reason being, please understand, it's interesting, of course, not that anybody sitting here is going to be able to really enjoy it because you don't want to be searched. But there is a lighter part to that as well. I'll come to that later. Under the block essay, and they are the same sections. If you can keep that in mind, among same sections, 158 AB, and almost the same language also, with some minor cosmetic changes. It rarely happens, but it's like, the ghost of Frankenstein reviving itself after more than 20 years. So the provision is, in substance, if I have to explain, what is the provision? They say 60% will be the tax, flat rate. Suppose 1 crore, 2 crore, 5 crore of unexplained cash, jewelry, assets are found. Okay, pay 60% flat. No interest to be calculated. And if you accept that unexplained income or assets or whatever it is as your income and own it up and pay tax at the time of filing the return of income, there will be no penalty as well. So only tax at 60%, no interest, no penalty, and you can say that because there is no penalty, there is no prosecution also. So for all practical purposes, somebody said, what is this? This is a continuous voluntary disclosure scheme. When is it opening? It's opening on 1st of September 2024. So if somebody is going to come and visit you, just tell them, bhai, thodi raah jo ne jara. Come after 1st September. And the irony, in fact, to some of my friends from the profession, the irony of this is, and it's really mind-boggling. Suppose take two cases. In one case, something is found, but without a search. It is on the basis of some survey or other investigation, etc. In such a case, you have a section what is known as 115 BBE, 115 BBE. What is the tax there? The tax is 60% and surcharge and cess, and there is a penalty mandatory. All that comes to 84%, and there is interest on that also. So actually, in some cases, it could go more than 100%. So imagine what's going to happen if you have something with which you are disturbed, कि आप लोड बहु पड़े छे, तो go and knock the doors of the income tax department કે સાહેબ આવો ને જરા, I invite you. હું 60% ભરીને છૂટો થઈ જાઉં. Because if I am caught otherwise, I may have to pay more than 100%. I think this has escaped their attention. You cannot continue with 115 BE In fact, one of the good things of block assessment, though it is criticized, કે ભાઈ તમે આ એક પકડાય તો પેલો કહે ને કે પકડાઈશું તો ભરી દઈશું 60%. But it's two ways. One is, okay, he's paying it straight away without any dispute, litigation, take it. At least you have this 60%. They have done another good thing in this. One of the good things in this budget is for curbing litigation and rather bringing an end to those kind of things. They have brought in a welcome provision which says that in the case of appeals by the department, they say the current limits are 50 lakhs in case of an appeal to the tribunal, 1 crore in High Court and 2 crores in Supreme Court. Shortly, they will notify it. These were limits from 2019, August 2019. They are going to raise it to 60 lakhs from 50. 1 crore High Court becomes 2 crores. So if in a particular case the tax effect is less than 2 crores, they cannot go to the High Court department. And in Supreme Court, it's 5 crores. So that 1 has been raised to 2, 2 has been raised to 5 crores, and 50 to 60. Welcome. But at the same time, an equally attractive opportunity is given to the taxpayers. And that, I think, is a provision which I like, because I believe, if they can market it well, it will be a scheme which will really run. The specified date is 22nd July 2024. So any demands which have arisen prior to this date, that is just the day before the budget, and they have classified this in two parts. One is demand as on 31st January 2020 and demands after 31st January 2020. So if it is a demand which has arisen in the last, say, 4.5 years, they say that if you want to, Vivad se Vishwas, you want to get through, just pay the disputed tax, only the tax. No interest, no penalty, no prosecution. And this is if you pay by 31st of December 24. It appears that they want to keep this as an open scheme also thereafter. So they say if you are paying after 1st January, you will pay disputed tax plus 10% of the disputed tax. Well, anybody who really wants, he'll pay disputed tax and get out. It's a welcome provision. The other is, in case the demand is prior to that, then they say disputed tax plus 10%. No interest, no penalty, no prosecution. And if you do it after 1st January, disputed tax and 20%. So I think this is something which, if they are able to market well, this will really also reduce the pending litigation that has piled up. Because people would want to buy peace. Many a times they fight and go in appeal. Why? Because there are penalties and interest mounting. Interest and penalties, they are killing. And then the danger of prosecution. I think this Vivad se Vishwas is something which will work. They've also brought in a provision that commissioner appeals have been given powers to set aside. Because, in cases where there have been ex parte assessments, now how is a commissioner going to decide? So they say, okay, in appropriate cases, you can do that. The provisions in regard to reassessment have also been rationalized. Only 3 years ago, they raised the time limits to 10 years, 3 years and 10 years. That they have brought it down from 10 to 5. So it is 3 years and 5 years. I think these are also some of the welcome changes. Let me wrap up because time has gone out. Only two last observations that I want to make. One is charitable trusts. I think that can take time on its own. But in substance, it's a welcome provision because they say we are rationalizing this by merging the two regimes, Section 10 regime and Section 1112 regime. I think that's a welcome provision. Those who are connected or concerned with that can take a close look. What I like is on the focus of ease of doing business. They say we don't want to now, irritate you for small things. What used to happen, say your son or daughter has gone abroad and studied, he had opened a small bank account, put some 100, 200, $500, comes back, forgets about that, and it is found a couple of $100 are there, or sometimes even some more amounts. They brought in that threshold of 5 lakhs up to which they would not bother. Now they have raised it to 20 lakhs. So your schedule FA, foreign assets, they say, of course, they have also taken care to see that those ESOPs which were given, and said that this is a gift by the company and therefore, the tax. So that loophole has also been plugged. But overall, I would say, barring some of the provisions that need to be ironed out, particularly on capital gains fronts, I think the finance minister has done a good job. Uh, the focus on the new regime, the tax rates being very rational and sound, and this ease of doing business, etc., is something. One thing, somebody at the beginning when I was entering in, Mukesh bhai, ajna mateni koi shairi છે? Because 44 years there has not been one budget where it goes without a shairi. And I said, well, there is nothing much to criticize about as far as this budget is concerned, except for making a mention about the capital market. And uh, the FM's eye on the market, and not just the FM's eye. Even આપણો ગુજરાતી જે છે ને, if Sawanbhai, you must have statistics, Deloitte must be having that. What is the share of Gujaratis in the total capital market? I think it's said over close to over 40% of the investors on the Bombay Stock Exchange, they are Gujaratis. એટલે ગુજરાતીને તો હવે તો પેલું કન્ટિન્યુઅસ સ્ટીકર આવી ગયું એટલે સવાલ નહીં. તો પહેલા શું છે કે પેજ 2 વાંચે ને જયેન્દ્રભાઈ સવારના તો જ પેટ સાફ થાય. કારણ કે એ વગર એને ચેન ના પડે. અને યુ ગેટ ઓનલી ધોઝ રેટ્સ ઓન પેજ 2, અધરવાઇઝ તો આવે નહીં. હવે તો એવરી મિનિટ, એટલે જેમ પેલું બ્લડ પ્રેશરનું મોનિટર ઉપર નીચે થાય એમ પેલા જેમ ભાવ ઊંચા નીચા જાય એને જો આ બાજુ બ્લડ પ્રેશરનું મોનિટર મૂક્યું હોય તો એ પણ ઉપર નીચે જાય. હા, so let me end in the lighter vein, something before we go for these last few minutes of fireside chat. Somebody who is so addicted to the market, કે છે કે એને આ દુનિયા છોડીને જવાનું હોય ને તારે જીવ નીકળે નહીં. Why? Because what is going to happen next? એટલે somebody had passed away and that was it. But then it was like એનો આત્મા બોલી ઉઠ્યો. કારણ કે બજારનો એવો રસ્યો હતો. એટલે એણે કહ્યું કે કફન ન ડાલો મેરે ચહેરે પર, મુझे आदत है मुस्कुराने की. कफन न डालो मेरे चेहरे पर, मुझे आदत है मुस्कुराने की. आज की रात न दफनाओ मुझे यारों, कल उम्मीद है मार्केट ऊपर आने की. એટલે આશા અમર છે. માર્કેટ ઉપર આવશે મારું ને પછી જ હું ઉપર જાઉં. Well, friends, that is all about the chills and thrills of the finance bill. Thank you, and thank you very much. Thank you. Friends, normally time constraints do not permit us, but today I think, Sawanbhai, we can, if chicks have already started coming, this is living up truly to the Ahmedabadi reputation. સલાહ મળે અને એ પણ મફતમાં, શું કરવા છોડીએ. Huh?
Mukesh bhai, thank you. I think this was absolutely absolutely expected. I would not say above expectation because every year we say above expectation, but wonderful and of course that lawful salah of how to STCG. So first question from me, sir. You said that 10 lakhs of rupees short-term capital gain, 3 lakhs would be my deduction, or and 7 lakhs becomes taxable. With otherwise, this would be 20% now is a short-term capital gain. If I move it through officially through a family member off market, then that 7 lakhs would be taxed that much lower. For 140,000 becomes 50,000. But if that gain is only 7 lakhs in all, then no other income, then would I be a zero income, zero tax?
Well, you must have read a few days ago, a write-up in the Times of India where they had taken feedback from me. In fact, friends, we have three sections: 111A, 112, and 112A. And my view has been very clear. This is what I have been opining all along, that 112A, when it got introduced in 2018, it came with a specific rider that you will not get rebate under Section 87. In all the three sections, Chapter 6A deductions, 80 family deductions are not allowed. Under 112A, you cannot get the benefit of rebate. My personal view is I am very clear, and that is under 111A and 112. You are entitled to rebate. You are entitled to rebate. Why? Because there is no embargo. Now, very funnily, you know what happened until 5th of July this year and until last year's, rebate was allowed. But with effect from 5th of July, my friends, those who are filing tax returns, they'll recall, up to 5th of July, all returns got accepted with rebate. 5th July, they changed the ITR utility. And as a result, they said कि भाई हमें rebate नहीं आती है. Now, just because you are changing an ITR utility does not mean there is a change in the law. So, in my opinion, this is not correct. Let us see, because a lot of representation has gone to the FM and the CBDT also. In my opinion, Upendra bhai, I strongly believe that if they do not take any corrective action on this point, if a public interest, petition is put up before the High Court will very clearly say that looking to the law, we don't go by the instruction or utility. Looking to the law, rebate is allowed. So I was looking at that, maybe are they changing anything? No. The only thing will be, let's keep it in mind, it will not be zero tax, because what will happen on 7 lakhs, the maximum you can get is 25,000. Suppose entire amount of 7 lakhs is your short-term gain. First 3 lakhs will be exempt. On 4 lakhs at 20%, what will be the
I am
tax?
transferring to the family member only.
Nah, but
That
tax
4
to
lakhs is not STT paid, no 20%.
नहीं, STT paid no सवाल નથી.
हाँ.
Still you will get the rebate, but what is the maximum amount of rebate? You will get 25,000.
Correct.
See, this rebate of 25,000 and the zero tax part is if you are paying tax at 5% and 10%. But if you are required to pay at 15 and 20, you will not get the full thing. You will still have to pay tax. But as you said, yes, it makes it even easier if you are not under the 111A route. એટલે તમે હું અમદાવાદીની વાત કરતો, તમે ડબલ અમદાવાદીની સ્ટાઇલથી વાત કરી, હા, કે આમાં તો બેવડો ફાયદો થાય. રિબેટનો ઝઘડો નહીં, આઈટીઆર યુટિલિટી વચ્ચે ના આવે, સીધું જે શોર્ટ ટર્મ કેપિટલ ગેઇન અંડર અધર દેન 111 એ બતાવી દો. યસ.
Salaried person with 23 lakhs plus of income, which regime would you recommend?
See, as I said, take a look at 4,08,333 4,08,333. That is the break-even point. So if you are going to be able to claim deductions higher than that under Chapter 6A or under other provisions which are eligible under the old and not available under the new, yes. Otherwise, definitely the new. I think new is more and more to stay, and it will. In fact, I'll not be surprised if in Modi 3 tenure, the old is virtually wiped off. Now that brings us to the question that you tried to raise. In fact, I have myself been saying that if you want to promote savings and investment, if you want to encourage housing, if you want to take care of healthcare and education, these deductions are very important. But then there is another line of argument, and that is, why should you invest in provident fund only because of tax? Should you not consider your own future and your retirement benefits? So it's a debate that can go on, but I believe you should now focus more and more on the new.
And virtually two-thirds has already moved to new regime.
I believe this year
It may be
it
maybe 80,
will go
90%.
even beyond that. Yes.
There's a question, this indexation is moved out now, that do you think it will increase the circulation of black money in the economy?
Yes and no. In the sense, keep in mind the government of Gujarat is actively considering to raise the circle rate valuations, Jantri. And frankly speaking, the Jantri is largely responsible because the mindset is Jantri thi, upar nahi javano. So you pick up the Jantri and then, you look at it. And that's why I said that indexation must be given. I strongly believe indexation must be given.
There's a question on grandfathering in the shares to continue, but it's 2001, fair value of 2000. There's nothing like other
See,
grandfathering.
2001 is actually a special provision for determining the cost of acquisition. In respect of assets which are very old, in respect of assets for which you did not pay anything. Say you have received something by way of gift, inheritance, etc. under Section 49. So 49 read with 55, so there is no doubt about it. I think it's a very clear provision.
There's another question which says કે અમે શેર જે વર્ષ પહેલા ખરીદ કરેલ જેના ભાવ 90 થી 150 રૂપિયાના છે અને NCLT માં company whatever is going on, so it is not traded. Now I have shares with me, not traded. I am stuck with the shares. Can I claim this as a loss?
Well, if you just keep them with you, no. But there is a smart way of doing it. You can always do an off-market transaction. As long if it is gone into liquidation, then you can claim loss under the head of extinguishment, because then your right in respect of that is completely gone. But if it is just unlisted or delisted, in that case, at a token, you'll need to do it at a token of 1 rupee or something, because otherwise your system will not take it aside. Raju Sahab, you agree? He's one of our capital gains market expert, Yeah.
Correct. And in extinguishment, it should be company liquidated and not just under liquidation,
No,
I think. Right?
only when there is a liquidation order. So, but you can claim either by way of an off market and claim it loss, or you can go for if it is complete liquidation, extinguishment.
How do you see this STCG?
Huh? Okay. हाँ गुजराती में बोलो, हिंदी में बोलो.
બેંક કરપ્શનમાં કે એની અંદર એ શેર્સ બધા હા એટલે એ જે શેર્સ બેંક કરપ્શનમાં યા આ રીતે ડિલેસ્ટેડ થઈ ગયા કે સસ્પેન્ડ થઈ ગયા કે જેનો હવે ટ્રેડ થતો નથી. હવે હું મારા ફેમિલી ટ્રાન્સફરમાં સમજો કે જેમાં આપણે કહ્યું કે 1 રૂપિયાની અંદર ઓફ માર્કેટ ટ્રાન્સફર કરીને એ સેટ ઓફ મારા કેપિટલ ગેઇનની સામે લઈ શકું.
લઈ શકો છો. That's what I am trying to say.
પણ જ્યારે મેં આ આપણા સ્ટોક એક્સચેન્જની અંદર ટ્રાન્સફર માટે આપ્યા ત્યારે એમણે કીધું કે હવે શ્રેય ઇન્ફ્રા SREI ઇન્ફ્રાસ્ટ્રક્ચર હું પર્ટિક્યુલરલી એને એમટેક ઓટો
See, of course, let's not get into names of.
નહીં કોઈ બી
But as I said, જો liquidation ના થયું હોય complete, so it is still there.
ના નથી થયું પણ એક્સચેન્જ એમ કહે છે કે ટ્રેડ થતો નથી એટલે અમે ટ્રાન્સફર નહીં કરી આપીએ.
પણ એમાં exchange ને ક્યાં કશું કરવાનું
off
છે?
market ને
તમે
exchange
ક્યાં
ઓફ માર્કેટ
busy
ટ્રાન્સફર ઓફ માર્કેટ.
Anyway, I think we can talk about this or discuss separately. You can do it. Let's move
Answer
ahead.
is if it can be transferred, you can get the benefit. If
मैं-
it cannot be, you cannot. So
મેં લાસ્ટ યર જ આપ્યા હતા હમણાં માર્ચ મહિનામાં ત્યારે એમણે એમ કહ્યું.
Chalo, we will wish you good luck again.
ઓકે થેન્ક યુ સર.
the question here is this increase in STCG and rationalization of LTCG. Do you see this as supporting to the larger vision of Viksit Bharat?
Well, let's not get Viksit Bharat into. I think Viksit Bharat, we have to remember 11 lakh, 11,000, 1111 crore infrastructure છે એનાથી વિકસિત ભારત થવાનું છે. So many other things are there in the budget. You also referred to quite a few of them. Let's not get, you see, tomorrow long term and short term gain does not mean anything for Viksit Bharat.
And
Be an honest taxpayer, that will lead to the country, to Viksit Bharat.
અને
Please.
ત્યાં સુધીમાં કેટલા બી દિલ્હીથી દૌલતાબાદ ને દિલ્હી
Of course,
થશે in
of course.
25 years.
Of course, of course.
Indexation of debt funds. That is the question. Is indexation given for debt funds?
This is a very interesting question. I think, let me answer this. Friends, as you are aware, 31st March 2023, સુધી જેટલા પણ debt fund you have taken, whatever debt fund units you have taken up to 31st March 2023, they are clearly eligible as capital assets and entitled to earlier regime, earlier under indexation, but now you will get one more benefit of 12.5% without indexation. You know, there is this section 50AA, which has been introduced with effect from any units acquired on or after, units, market link debentures, etc., on or after 1st of April 23. Then they are deemed to be short-term capital gain, their profits. But I am very clear, and I think there is no doubt about it, that if you have held debt fund units prior to 31st March 23, and now you don't even need to wait for 3 years, you can do that after 2 years now, and you will not get the benefit of indexation because indexation is taken away. But as capital asset, you will get, once it is long term, you will get 12.5%. So whatever tax is required to be paid on the transfer of the debt fund units acquired before 31st March 23 by way of long-term capital gains, that long-term capital gains without indexation will attract 12.5%. Any questions on that? No, because indexation, yes, that's right. But you will not come in the trap of 50AA. Please rest assured about it. So, frankly speaking, no. Which amendment?
Indexation. No, it is
No.
prospective for sale
Indexation
happening
is a
from yesterday.
prospective amendment.
Sale.
But see, please understand, the acquisition of units and indexation, they are completely separate provisions. The question is, those units, are they long-term assets or short-term assets? They are long-term assets. The moment they cross that 2-year period of holding, now it's 2 years. Earlier it was 3 years. They cross 2 years, they become long-term. And if they are acquired prior to 1st April 23, they cannot be deemed as short term. So what cannot be deemed as short term and what is actually long term, it has to attract long term capital gains tax. And since prospectively indexation is not there, when you sell them now, you will attract 12.5% if they are sold after 23rd of July 2024. Be very clear. Okay? This is not discussed in any papers. This is again free advice, but authentic advice from AMA.
I'm happy from
And
AMA.
as they say, older the wine or the whiskey, it's more to be trusted. This is 44-year-old. Okay?
Old wine, old friends, old books. Okay, there's a question: house property
It's
purchased
vintage.
before 2001, vintage. There's a premium of the vintage. Uh, House property acquired before 2001 for a X value. Then there are some money paid for the house property additionally after 2001. Some money paid additionally for improvement. And what would be the taxation? Now
There'll
there is
be no
nothing like
indexation,
simple,
but
simple
cost
math.
of acquisition, cost of improvement, the total will
Sale
be
value
taken,
minus total value. Now
and
there is
then
nothing
long-term.
like a year that
Absolutely.
makes any.
So to that extent, there is simplicity,
Correct.
but beyond that,
Nothing. So
nothing.
it's a simple arithmetic
Yeah,
now.
yeah.
In that case. The question here is when will the direct tax code be implemented? Whether it is
The
needed at
finance
all.
minister says 6 months. Do you think the Income Tax Act can be done in 6 months? I was connected with the exercise for 3.5 years, and we gave the draft, but they could not even look at it for more than 6 months. So it's a massive task. I think what is important is the simplicity and rationalization in the mindset of the tax administration. Because whatever you may do to simplify the law, if the minds of the administrators and the North Block, there are complexities there. So your law is never going to be simple because there'll be all weird interpretations. Yeah.
There's a question under 80 IC, and pardon me for my ignorance, 50,000 deduction is available. Now, in addition, there is a 80 TTB, capital TTB, additional 50,000 is allowed. So I'm not sure about this.
80 TTB is obviously senior citizens' interest. I think it's more of a tech. 50,000 is there, 80 TT. But these are all under the old scheme, so it will not come in the new.
Your opinion, if the person moves to a trader from an investor. So if I'm an investor, then it will be capital gains trader. It will become a business income. Would it be beneficial or not? And like, if at all, I can have the benefit of presumptive taxation under 44 capital.
Course barna sawal che. It's nothing to do with the budget. But nonetheless, I'll take it. Because I've been talking about it in all of my videos and all that. Let me just sum up. Investor, you enjoy the concessional rates of capital gains. If you are a trader, then obviously you can go one step forward. You can avail the benefit of the presumptive scheme, business scheme, and without keeping accounts, you can also claim expenses, etc. And even if like you are out of the presumptive scheme, you can still, business means you are effectively claiming expenditure. So, as they say, I did one of my videos and people asked me question, how and why? I said, why not? Multiple DMATs. Can you have multiple DMATs? The answer is yes. If I have two DMATs, one as an investor, one as a trader, and keep separate, scripts there, keep, there is a CBDT circular which permits this. So it's all doable.
Can we gift or transfer equity to HUF and then sell the same for the purpose of tax benefit? Will it be short term gain? So
अभी मिनट में नहीं था साहब. We will, this whoever has asked me this question, I can give him complimentary advice, but at the cost of saving time, we'll keep this rollover. It will take time.
Foreign shares, what changes in capital gain
Yes.
tax?
Foreign equity, with a view to attract foreign equity, the 40% rate has been scaled down to 35. And the idea is that, they want to promote, this foreign investment here. I think they can still do better, but the government has taken a series of measures. You mentioned about FDI, there are some gray areas, but overall, it's free. Particularly the focus is on tourism. As you know, they have allowed this presumptive scheme for these cruise ships and all of them. So there are some good attractions.
Just one. Was it about foreign shares or foreign equity?
It is no. If it is
I had a question on foreign
ESOPs,
shares.
I already mentioned. This is, I think they're
So,
talking about
This is a foreign company.
foreign tax on foreign companies.
Okay.
So if
But
it is
if
foreign
I am
shares,
holding shares
what I
of
was-
Facebook, say.
So if, as I mentioned, one of the provision was companies, multinational companies grant to their employees ESOPs in shares which are held outside India. So for that, there was a mischievous provision. There was a judgment. They've tried to overrule that and they brought it within the realm of tax. But for foreign equity being brought into India for foreign companies, the tax rate has also come down. That's why I thought I wanted to
No,
clarify.
I wanted to ask.
But the
about-
listed.
Yes.
Suppose I buy foreign shares.
Yeah.
I buy Google shares.
Yeah.
So what is the taxation for that?
The tax would be, normal. It would come under now, in my opinion, under 112 at 12.5%.
And
And just for one.
Because that's the only provision under which that can be taxed.
they would
See,
not
one
be
thing
treated
is
as
there,
listed.
whether it is Jajuji, whether it is Indian or it is foreign, transfer of shares is a transfer. The nature of income does not change. So actually earlier, they used to attract, you see, there was no indexation earlier because indexation is only in respect of our equities. But now it will come, there is no other rate other than 12.5 for long term, in that respect.
No, pardon me.
Short term will not come
Yeah.
because short term, it's not STT paid equity. So it will be in the normals. If it is short term, it will be normal slabs. If it is long term, it will be 12.5%, 112.
Pardon me, my impression was the following that this 12.5%, 20% is for shares listed on Indian exchanges.
Not necessary.
All
Any
other
asset.
shares
112, Jaju Sahab, is for all remaining capital assets other than these two of 111A and 112A. So practically everything else, if it is a capital asset, it has to come within 112. There is no other section.
which
Yes.
says that it will become long term more than 2 years. Not
unlisted share.
Yeah, but
Correct, more
but
than 2
what
years.
what will be the head of tax? Tell me.
see,
Unlisted shares are taxed like 2 years and above.
Yes.
long term.
112, 12.5%. So that's what I said.
But 2 years, long term.
Correct.
So that's what I said, not 1 year. It will not be 111A, not 112A. It will come under 112, and 112 is now 2 years for all assets. Unlisted shares, anything, debentures, land, building, gold, jewelry, ornaments, everything, goodwill, intangibles, everything else. Yes.
Done, sir. I think this is repeated.
Again, that's time consuming. Let's
Yeah.
not step
Correct.
into.
I think the last two
Yeah.
it looks
Okay,
like
sure.
this I think we took this, but a limit of 5 lakhs or 7 lakhs under section 87A. So rebate 87 capital A. Is that applicable to STCG? That's
I already answered
already
that.
answered,
In
so
my
that we discussed.
opinion, very much yes.
yes. And this is again the same redemption of a debt mutual fund which is happening in 2024-25. Before the date, that also you answered that if before 23rd of July, it have the indexation. If it is purchased before 31st March.
I know
23,
as President AMA, you are looking at me for all these answers. I think we should take royalty from, our audience.
Certainly. Maybe I will convert this into some publication and charge them what else as AMA.
Thank you
so
very
much.
much.
Thank you,
I think
ladies
we've
and
taken
gentlemen. I think
extra 9 minutes.
Janil, over to you. Honors.
Sudayu?
Sir, we'll take that off. We'll take that offline if you don't mind, because sure.
we'll
Okay,
take it-
okay. Sure, if sir says yes.
Yeah, tell me.
Please.
કે મારી 10 કે 12 લાખ આવક હોય અને હું રિટાયર પર્સન તરીકે શોખ માટે ફક્ત શેર ટ્રેડ ડિલિવરી લઈને કરું છું તો તમે કીધું મારે ટેક્સ લાગે છે 1,40,50,000 અને એ જ વસ્તુ મારા મિત્રને ધ્યાનની આવક છે તો એને તમે જ ગણાવી એટલી જ આવક છે તો તમે તો એક જમાનામાં કમિટીમાં હતા સજેશન કમિટી તો આવું કોઈ સજેશન કે એને
ભાઈ હું નથી એટલે તો આવી જોગવાઈઓ આવે છે.
Sir, I discussed થઈ ગયું. We are holding so many people. We are
ચાલો.
holding so many people.
એમનો લાસ્ટ ક્વેશ્ચન કોનો હતો?
ના, last question એટલો
પતી
હતો,
ગયો?
can we hold shares in foreign? I said answer is
Yeah,
yes. Foreign companies, the Jaju sir also asked that we can hold the shares.
I think after a long time,
Yes.
we've had a very,
Ah.
really interactive fireside chat
Very
and
true.
Q&As
And I
with
think
our audience.
compliments to you. I think nothing less than a loud round of applause for Mukesh Patel, sir. 44 years of continuous analysis of union budget, sir. Hats off. And next year, when we move to a milestone year, 45th, and then we look forward to 50th, I think this is only incredible. Just for a small note, this is an auditorium of 450 seater, which is a full house. But Sawan bhai, you'll be happy to know last year's session, which went on YouTube, got about 1,000 eyeballs on AMS channel and about another 500 on Mukesh Patel sir's channel. So there's likely about 4 times the size of this auditorium, which will be witnessing the analysis over the next couple of days. So thank you so much, ladies and gentlemen, for this scintillating evening. Once again, thank you so much, Mukesh Patel sir, and thank you so much, Dr. Sawan Godewala, for being here with us today evening. Thank you so much once again. At AMA, we look forward to, of course, welcoming you again and again over for the learning session. Thank you so much. Yes, sir. Thank you.